It's not quite 2023. It's the dying hours of 2022 here in the UK. And it's time to think about the trades going forward into 2023 and what we can be looking forward to. Now, contrary to normal, we're starting with crude oil because that's what I've piled into long at the moment. On the basis of it looking great on the daily, the weekly doesn't look bad either. We probably don't need these prices down here unless it really is the end of the world, in which case, well, there'll be no one coming to collect your debts anyway. And here we are on the weekly. So you can see we've come into a very, very long term, this goes back even further even, support zone, whether we're working on closes or wicks from these highs through these levels, acting as support. This whole zone is potentially a big back test. A big back test zone, and we could be transitioning to more or less higher prices. It's not impossible we come down and make a right shoulder down here. 40 to 50, that's not that wouldn't be out of the ordinary in terms of price action. But in the immediate term, big divergences coming in on the weekly, coming into this big potential backtest support zone from the monthly time frame, and we've had a nice move up for the last 2 weeks, and then a week where we retested into this candle, this thrust candle, and then closed marginally higher. The risk is, of course, this eating up this wick, eating up all this price action has tired out the buyers. Or it's excellent that it got eaten up and we've backtested everything we need to down here. Looks like a head, left shoulder, right shoulder, but we've got the left shoulder looks more solid because it's a left shoulder on close. If this is a right shoulder, it's so far only on wick. It's not. The line chart has not formed a right shoulder on the weekly. Is one potential issue. But we're seeing these massive divergences. If we go down on the daily, you can see we've got another head, left shoulder, right shoulder. On the weekly, I think, if we look, we can see it on the weekly. I wish it would stop doing this. Can we see it? Head, well, that's what we're just looking at. Where's it gone? Daily, yep. Head, left shoulder, right shoulder, and then here, head, left shoulder, right shoulder. We're seeing reversal patterns all over the place on all different time frames. And, you know, we came down to the lower resistance, we tested internal resistance, becoming support, and then we've come to the top of that very long-term backtesting zone, put in an inverted head and shoulders here, and moved up. So it's all looking very good. I think it's not unreasonable we run up to above these wicks here, which would take us up to 93. We zoom out. There's room, I think, all the way up to easily 100, potentially even higher. Oil could be starting a substantial run. If we look at our oil-related charts, you can see we had the positive building divergence on the momentum histogram, on the MACD histogram. You can see we've got the momentum cross, we're above the 14. You can see there's a sort of head, left shoulder, right shoulder, head, left shoulder, right shoulder, head, left shoulder. Not the right shoulder is the cross, I suppose. Excuse me. And we've got room to run. I mean, a run to 100 is a $20 move. That's a big move. That's a 2,000 point move. So even if we come back into sort of, you know, that sort of the apex of this triangle here that preceded this top. So the ratio is bullish. ExxonMobil, the stock is weakening against the underlying. Oil is increasing in value faster than the company. And we've got all this action, all this price action I've just been describing on those different time frames down to the daily. So daily, we've got support coming in at $78. If we go down to the 6 hour, there's our head, left shoulder, right shoulder. Again, we keep going lower and lower on these time frames and seeing these reversal patterns. On the 6 hour, from this low to this higher low, we got the positive reversal on momentum, and we got a positive reversal actually earlier on momentum of price volume trend. But and then this was lower than here, but price was higher, so it was actually, this was its own positive reversal as well. We've got the crossover, we're above the 14s. Look on the RSI, you see the same head, left shoulder, right shoulder we saw in price. Broke through the neckline, and we shot up. We're at a really key point now in this whole 80 to sort of 81 area, because going back, distribution, dump, comes close, scalded cat, down, accumulates below, thrust up, distributes again, dumps viciously down, doesn't even get close, comes down, comes close, scalded cat bounce, but not as dramatic. We get above, we distribute a little bit, and then instead of these thrust candles that cut through, we see 1, 2 periods. 1, 2 periods. Most of the dump happens in 2 candles. Here, it's not happening. There's more range on the candles, they're more rangy. Now I know obviously this is over the Christmas period, but they're choppier, they're stubbier, and they're not going as low, and then we put in these positive reversals. And then we finished closing up, breaking through the 14 band, that capped all this, and breaking up. On the hourly, there's our head, left shoulder, right shoulder. You can sort of say, well, that's sort of like that was the neckline. The drawing tool, if it draws, would be appreciated. And there it is. I mean, ideally we would stay well above $80. And we'd have just a very quick consolidation and keep moving up. And this isn't an inefficiency that needs to be filled, it's a sign of strength. We don't need to fill it, would be ideal. But we could come down, back down to sort of 78, you know. Well, bias is long. Bias remains long. Bias remains long. Because, I mean, I think it has to be, really. That's just the look of the chart, that's the look of the ratios, that's the look on all the time frames. It's just, everything is saying to be buy biased, regardless of, you know, whatever happens in the short term, is my take on oil, and I think it could have a very good run. We normally started with silver. I've sort of, I won't say given up. But I'm less heavily involved with it. Again, head, left shoulder, right shoulder, neckline, nice breakout. Big time divergences. If we've broken up through resistance 1, through resistance 2, we're sort of bobbing around above it now. We're getting these candles compressing. Pressure, pressure, pressure building up at this distribution that preceded this plunge in price action, this decline. And we're at the channel top. So maybe it wants to take a bit of a rest, maybe it wants to chop around, maybe it wants to test under this red line, maybe it wants to come back down to sort of 21, 22, sort of the midpoint, this horizontal resistance, or maybe it's just going to go straight up and people will be shocked when by, you know, sort of the end of February, silver is at $32, $33, $34. Yeah. That was the weekly, the daily, putting a nice reversal here that I marked on, that I didn't benefit from. And, you know, this was the area that preceded the big plunge all the way back in spring of last year. And we're sort of bobbing into it, bobbing into it, bobbing into it, bobbing into it. They're not pushing it back down. It's not rolling over. This to me looks like we're putting in a sort of, again, drawing tool. It'd be nice if you worked. You know, it's looking like that to me. It's looking like a bull flag. To me. 4 hours. yeah. And this is right tail end of the year price action, and we're in the sort of the higher end of the mid channel. It's not an ideal time for getting in. Going for 15. No, it's not an ideal time for getting in either way, I think. Head, left shoulder, right shoulder, potentially. I'm seeing them everywhere. It's a sign of insanity. Our silver-related charts, or rather our precious metals-related charts, we're under the 14 for miners against gold. But, I mean, this has been weakening for a while, and gold has just gone up anyway, so what does that count for? Is it going to drag gold down, or will gold drag this up? Tip shy, again, falling since the start of December, and silver has marched on. It's increased by $2 in the time that the tip shy ratio has been declining, so real rates have been rising. And it's just not cared. It's just not cared. So either this compression, sort of a wedging, is going to be bad and break down because we're going to get dragged down by things like this and this, or the strength is it just doesn't care. I mean, there's your two interpretations, there's your two narratives. It's on buy till it's not. Silver against stocks, outperforming stocks significantly. Potentially rolling over a little bit. Potentially. It's on buy till it's not. Silver against gold. We've come into sort of, you can see this sort of key level here. And we've pulled back. And again, it's bullish till it's not. We've got a bit of a roll over on momentum, but fundamentally, it's bullish till it's not. And if we look at the yen as the ultimate anti-dollar asset, closing higher. So that will benefit all other anti-dollar assets, one would think. Uranium. Something I've shied away from a bit. But I called it long down here. But I got into crude oil instead because uranium is just fucky, and I don't like being in. I can only trade an ETF, and I don't like being in something that can gap up and down worse than, you know, the Globex markets, which at least can only gap up and down based on some insanity over the weekend or some current event or whatever. Whereas these things they're only open for a few trading hours a day. I don't know why in this day and age, but there you go. So I prefer to go along with crude, but you can see again, head, left shoulder, right shoulder. We were moving down low in price all this time, but price volume trend momentum just not confirming. Bobbing along the top of the buy zone on RSI, and then we've crossed over our moving averages. And where did we come into? Again, the same damn pivot area, head, left shoulder, right shoulder on that wick. Seeing them everywhere. 4 hour, yep. And of course there was the wedge, there was the positive divergence, there was the wedge, there was the breakout, there was the back test. It was all screaming to buy, but I mean, where from here? Let's look at the weekly. It's been choppy and fucky, but look, we're still consolidating. I've pointed this out numerous times now. Inside this wedge, we're bobbing along just in positive territory here. And as long as we're above here, I mean, if we can get over 2018 again, it could be lift-off time. That's, I probably won't get involved in this market, but that would be, yeah, I mean, look at it. I would actually be buying now in anticipation, because if this is a safe right shoulder, then you'd only need to move your stop here, or even higher up, because if you're anticipating that this is not going to get tested, then also, higher up shouldn't get tested. If the shoulder is in, it's in. It's not going to be, dipping down into it again too much, if at all. So you don't even need to put your stop at the bottom of the right shoulder. You could sort of, scatter some up and down the length of that candle for your positions if you wanted to get in early. Break of this, I think, takes us to at least 2200, something like that, in the immediate term. Failure to do this will result in coming down to the 1800s, high 1700s, in all likelihood, in my opinion. I'm not sure how useful the uranium ratio charts are yet. They've not really proved themselves to me. I've not been watching them for too long. But you note, on the histogram, we've got the momentum divergence coming in here at this low against stocks. And we moved above the 14, we've got a positive momentum cross. Now uranium miners against the commodity. I've got no idea if these are meant to function like GDX or GDXJ against gold, like the underlying, the miners against the principal commodity. I've set this up the same way, it's the miners against the commodity. Against the physical, this dumps out. Maybe it's not very useful, I don't know. So we've looked at oil, we've looked at silver, we've looked at uranium, the S&P. Oh yeah, I'm long the S&P. Yeah, big time. Big time. Well, I got in light at first, but then when I saw the level we'd come in at, you know, I was hammering the buy button. I was hammering market buy. It was such a good level to get in as well. And it doesn't mean this can't turn around and, you know, we wake up on the first trading day of 2023 and it's dumped out 5,000 points because, I don't know, something horrendous has happened. But you can only trade what's in front of you. Again, head, left shoulder, right shoulder, head, left shoulder, right shoulder. Got the divergence. Positive divergence is coming in at these lows, which is effectively a kind of double bottom. What's the underside of this? The underside of this price action depends how you want to draw it. That's sort of on the closes. Do it a bit more on the wicks. Yeah, wick to wick. That wick to that wick. Yeah, let's put that in there. Okay. Now I was fortunate in that, well actually let's zoom out and go on the monthly, let's look at what's happening on the very long term, because this looks terrible on the monthly. This looks like the sort of the level of doom here. Yeah, here. Let's make this the big red level of doom. Let's thicken that up. There's the level of doom, and it looks like we've tested it once. We tested it twice, i.e., and now we're going to shit our pants. So failure to get over 4140 will lead to disaster, is what I'm saying. 4140 is a key level. It's a key level. It's just key. Weekly. Ooh, we didn't quite put in a negative reversal on momentum there. That's good. And we didn't put in a negative momentum reversal here either, but we have crossed over here negatively. We're bobbing around in the MAs here, but you can see this is a key level. It's this top here, it's this top here, it's also a low here, the body of the doji, low here, it's the wick low, it's shaving neatly the bottoms of these candles. And it's important. It cuts right through the middle, it wicks into it here, back above, dumps below, comes close, scolded cat, right through the centre of these power candles here, power candles thrusting up and down, it goes right through the centre of them, and then it's right on, look at that, supporting the doji, or the hammer, or whatever you want to call it. So it's an important level. That's this one here. That's a weekly. Oh boy, let's thicken that up a bit. And the wick got eaten up and we closed above the key big long-term line on divergences, etc, etc. Let's look at the 4 hour. And again, bobbing around, bobbing along. What can we spot? What can we see? Not really much divergence-wise. And there's this, but you know, well, you have all this in the meantime. Breakout. Yes, I mean, your lows were sort of static. Your lows were sort of static down here. So people were buying at the same level, but sellers were becoming more aggressive. Normally flat, it's the flat end that breaks. Whether the flat end is on the downside and then we break down. Or if you have a flat and price action is coming like that. normally it's the flat side that breaks, whether downwards or upwards. Does control Z shortcut work? Oh, it does. Ah, new discovery for me. But in this instance, we finished with the wick getting eaten up, closing above this key level. Yeah, it just came in. Forget it. You'll see why on a lower time frame. This was literally the level here, around 3800 and up to like 3810, where I was pounding the buy, pounding it, and we've got, look, double bottom, and where did we come into? Well, the base of this thrust candle into the body of this doji. And what was that? Well, it was also this extreme wick low. It was all getting it dangerously close into these levels here that were very, very important. So whether we get follow through or not, it was such a tempting level, I was pounding the buy button. And again here, look, there's your positive. Oh, come on now, draw. I need a faster computer. There's your positive divergences on the right down to the 15 minute. It was all lining up. And that's what you want. It's like pieces of a jigsaw coming together. It's just lining up. Wherever you look, you're looking on the weekly, you're looking on the daily, you're looking on the 6 hour, you're looking on the 4 hour, you're looking on the hour, the half hour, the 15 minute. I don't usually go much lower than the 15 minutes. I sometimes nip onto the 5. It's all lining up. And that's when you trade with confidence. But what do these be saying, our other market indicators? Well, they're ambiguous. I would say. In terms of cumulative NIAD, I mean, we're below the 14, we're below the 50. MA is still negative cross. But you can see the improvement on the histogram as we came into, again, like price was at a pivot area, this was a pivot area. It may amount to nothing, but I'm not going to lose any money unless we gap down horrendously. If it's just normal price action, it's not going to be a loss. Rinnier. Now what we're seeing is, whereas in this downtrend we were consistently spending time under the 20, we've started bobbing into the 20 and bouncing up, The last time we really saw that was here. Where's me inspect? We're going to inspect it. Oh god, now I've lost my place. So we bobbed into the 20 here, and look, nothing happened. Something happened. You got, a little pause in the downtrend. Well, typically, yeah. Then we come up to 70, 80, we plunge, we're held underwater. We're like a beach ball, held under the water, and we boing back up. We make it halfway, we make it to 70, 80, we come down. And again, what happens when we hit the 20? Get a tiny little move here, this 1, 2, we get the wave 2. Back down, back up, back down, back up, back down, back up. You can see the divergences coming in at these lows. We're not making new lows in Rinnier as we are with price. Momentum is turning. And then we go a little bit higher. This time we go to 80, like we did here. And this more significant move up here. It's over, And that was the culmination here. You got this. Rather than this, you got this. It's still sort of sluggish, but again, we've not. You can see the broadening pattern almost here, and the divergence is coming in since September. The last time we were holding under, and I know you've got these divergences here, but we were holding under. But this time it's sort of, it feels like a role reversal. It feels like resistance has become support here. It might not turn out that way at all. It could be like this case here, where you're going to bounce up and then plunge back down underneath. But like I said, it's a mixed case, it's an ambiguous case. I think, because we've held 1, 2, 3, 4 tests of 20. That's enough to say, well, it's worth a shot to the long, especially combined with all the price action stuff that made me get into those positions in the first place. With, like I said, everything lining up so nicely. Shall we throw MACD on here? Let us do that. So the Nasdaq's taken one hell of a pounding. It's gone from sort of, I'm not even sure if these were the highs. I thought maybe, I can't remember where the exact high was, but 17,000 down to 10,000. That's one heck of a haircut. I guess like a 40% haircut. And all similarly to this, when we see the change in character, we start rejecting from 80 and holding under 20 instead of rejecting from 20 and holding over 80. We see that change in character coming in November, December. We see that change of character coming in November, December. Yeah, and now we're mostly holding below this sort of flip zone here between my red and my blue horizontal lines. And this whole thing has been a bear market. The lows are getting higher, the lows are getting higher, the lows are getting higher. We're still broadly negative on a very long-term basis. It's still under the key flip zone. We're not sustaining above. Every time we do go above, we get a little bump, and it's a selling opportunity. We get a little bump, it's a selling opportunity. And you've got to be there to take it. You've got to have that mindset. We're still below zero. Big time momentum divergence. Big time momentum divergence. Price is making a double bottom. This is positively diverging. This is positively diverging. It's still negative, but you would expect it to still have negative characteristics at the low, because it's still the low. But it's the change underneath that is going to be rolling over and carrying this above the zero line in the future. It's anticipatory. Potentially anticipatory. Again, the long-term bias still being negative. It could roll right back over, but it's more reasons to say, you know what, it's worth throwing on some longs, and that's exactly what I've done at a prime level. I'm very pleased. Again, backtesting the midpoint over the percent of stocks over the 50 in the S&P 500. So it's neither fish nor fowl. It's neither one thing nor another. So it's worth throwing on some longs. So that's stocks covered. Having mentioned Nasdaq, let's zoom out and have a look at it on. Should we look at it on the monthly? I mean, on the one hand, it looks so preposterously overextended. I mean, this was the tech boom of 23 years ago now. My goodness, I remember it being a joke on The Simpsons. You think, well, could we not come back down here? Is that absurd? But the world of technology is so much more all-encompassing and penetrated into our lives. Everything's a gizmo and a gadget. Everything's screens and digital, and I mean, so even if this was insanity 23 years ago, our lives have changed so much. And there's so much more technology in them, so much more global market for it. As much as one would think, we have to come back down and maybe even test some of the truly low levels. Maybe it doesn't. Maybe this pullback, just shy of a 40% pullback is sufficient. I don't know. I mean, to think that, only a couple of years ago we were down at 5,000, 6,000 points, and now, it feels like the end of the world when we're at 11,000 points. Well, you don't know what to make of it. You really don't. It still kind of looks like it should die. I think failure to get over this line here, this peach-coloured monthly line, failure to get over 11,200, 11,230, 40, 50, whatever, then maybe then, yeah, we can continue to die. We'll go back down to 8,000, maybe for starters. Over the line convincingly. Well, that's another thing. Is there anything else worth covering? I can't think, and I've waffled on far too long already, and I'm going over elaborating with my stupid analysis. No, that's it, I think.